32 countries just agreed to dump 400 million barrels of oil onto the market, the single largest emergency reserve release in history. And oil prices? They went UP. Brent crude just touched $100 a barrel. If that doesn't tell you how serious this situation is, nothing will. Let's break down what just happened, what it means for your money, and why this might be the most important oil story of the decade. So here's the backdrop. The Iran war has effectively shut down the Strait of Hormuz, the narrow waterway that normally handles about 20 million barrels of oil per day. That's roughly 20% of the world's entire oil supply. Oil flows through the strait have plunged 86% from normal levels. Over 700 tankers are sitting outside the strait right now, unable to pass through safely. And it's getting worse. Just today, 3 vessels were struck by projectiles off Iran's coast. One ship was hit 11 nautical miles north of Oman, causing a fire on board and forcing the crew to evacuate. This is real, active disruption, not theoretical risk. Oil has been climbing relentlessly. WTI crude is trading around $94 per barrel today, up sharply from yesterday's $87 settle. Brent crude just crossed above $99, flirting with triple digits. We haven't seen prices like this consistently since mid-2022. So today, the International Energy Agency, that's the IEA, the 32-nation energy watchdog, unanimously agreed to release up to 400 million barrels from their strategic reserves. To put that in perspective, when Russia invaded Ukraine in 2022, the IEA released about 182 million barrels. This is more than double that. It's unprecedented. Several countries have already committed. Japan's Prime Minister Sanae Takaichi confirmed Japan would participate. Germany's economy minister Katharina Reiche said the same, and President Trump hinted that the U.S. would tap the strategic petroleum reserve, quote, a little bit. But here's the thing. Trump also said, and I quote, "The United States is the largest oil producer in the world, by far. So when oil prices go up, we make a lot of money. Now that's great for U.S. oil companies, but for the average American filling up their tank, not so much." Now here's the math that should concern you. 400 million barrels sounds like a lot, but the Strait of Hormuz disruption is choking off roughly 15 to 20 million barrels per day from global markets. At that rate of lost supply, 400 million barrels gets absorbed in about 20 to 26 days. That's it. Less than a month. So unless this conflict ends quickly, we're looking at a temporary band-aid on a massive wound. Let's talk about what this means for your portfolio. Energy stocks are ripping. The SPDR S&P Oil and Gas ETF, ticker XOP, is trading around $159, near its highest levels since June 2022, with year-to-date gains near 30%. If you're in oil producers or tanker companies like Scorpio Tankers or Frontline, you're having a great month. On the other side, anything that burns fuel is getting crushed. Cruise lines are in freefall. Carnival is down to about $24.50, down over 20% in March alone. Norwegian Cruise Line, same story. Airlines are bleeding. Delta down 7% in a week. United and American down 9 and 10% respectively. The broader market, the S&P 500 dropped to 6,685 today, down about 90 points. That's below the key technical support at 6,764 that analysts were watching. The next level to watch is 6,500. That's the October 2025 low. If we break that, things could get ugly. But here's the silver lining. Clean energy funds hit record highs today. The iShares Global Clean Energy ETF, ticker ICLN, is surging as investors rotate out of fossil fuel chaos and into renewables. That's a trend worth watching. Also worth noting, yesterday's CPI report showed inflation at 2.4% year over year. Actually pretty tame. But that was February data, before the oil spike really hit. Next month's numbers could look very different. So, where does this go from here? There are 2 scenarios. The bull case. The IEA release buys time, diplomatic efforts gain traction, the strait gradually reopens, and oil settles back toward the 70s. In that world, beaten-down travel stocks become screaming buys and the S&P bounces off support. The bear case, the conflict escalates, 400 million barrels run out in a month, oil pushes past 100 and stays there, and we get a supply-driven inflation shock that forces the Fed to hold rates even longer. Markets are already pricing only one rate cut this year. If oil stays above 90, even that might come off the table. Key dates to watch. Thursday, we get the PPI report and weekly jobless claims. March 18th is the next Fed meeting. There's a 95% chance they hold rates steady. And every single day, watch the Strait of Hormuz. Any further attacks on vessels, and this whole situation escalates fast. Look, 400 million barrels sounds like a lot, until you do the math. The world is burning through that in less than a month. And when the President of the United States says high oil prices are good because we make money, you know who's paying for that. You are, at the pump. This is far from over, and the market knows it. That's why oil went up on the biggest reserve release in history. Stay sharp, stay informed, and if this video helped you understand what's happening, smash that like button and subscribe so you don't miss the next move. I'll see you tomorrow.